Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, September 3rd, 2025. So we saw the Bulls. They had a pretty nice gap up today. I'm not really quite sure what the rhyme and reason was, but in any case, in the morning notes, I said they're going to be opening up right near that 64.44, and most likely there's going to be sellers waiting between 60.44 and 60.54, and we made it up right up to the 60.54. From there, took out the gap part of it where I thought this was going to hold and closed the gap right here. And then really it was the last 15-30 minutes that they just kind of skyrocketed it up. Because it was as high as plus 40, and it was all the way down to I think it was only plus a couple points at one point. So the Bulls were able to pull it off. And now, like I said, I'm on the fence right now because we still have this gap up here that I would not be surprised they try to close by Friday. And what that would actually do is get everybody all bulled up again. And if it gets held down, like I said, next week is the week that the cycle really turns kind of bearish. And it doesn't mean it has to follow it. It doesn't mean the market's going to crash. It just means we go on the defensive. And that's what I've done. And I'm not, like I said, I'm predicting some kind of pullback that is going to start. If we go through this cycle without one, then maybe we go into year's end because they skipped a lot of these cycles and just marched forward. But as I said, I'm not really looking for any kind of bear market. I'm really looking for a test of the 200-day moving average, and that's going to be down somewhere between the 59.72. But I wouldn't be surprised to see us do a 50% retracement from the April lows to the highs that we made here. That would bring us somewhere around that 5,600 level. So this is really would be my downside targets, anywhere between the 59.72 down to the 5,600 level. That would be where I think it would be ideal for buying if it got down there. These bearish divergences, again, they can be ignored until they're not ignored. And typically they drag out and everybody gets too confident that the market's never going to drop. And then they pull the rug out and it just keeps going. Is it going to play out like that? I don't know. If history is going to be our guide, yes, it will. But right now they're not able to get it through. Once they get through the 50-day moving average here at the 63.13, they're going to run into this important support level, that 6,200, where buyers have stepped in every time. And if that breaks, that's when I think we'll see really momentum pick up and start testing some of these downside targets. Now, if we break out of this, then the next target's going to be up at the 6,600 level. And typically, what it's going to do is we're just going to move this over because this still isn't a five-wave, say, pattern right here, and you can see that the divergences are following along with it. So I'm on the conservative side. I'm not saying to get aggressive on the short side. I'm just not. I'm trading the indexes on a day-to-day basis, but stock wise, right now, I'm sitting on the sidelines with it and seeing if I can get them at a discounted price. And the quantum stocks that I've had are falling, so we're getting them at a discount. We'll see if the indexes follow. So again, if we break out of this, the next target's going to be 6,600. Really the first clue is if we take out the 50-day moving average, that's at 6,300. Below that, then we go to 6,200, and that's where panic would set in if we start breaking through there. Short term, this is a pattern. I had showed you that there could have been a possibility that we were forming a small head and shoulders pattern, and actually this was the target. But what we did here is we came down, and it could be building another head and shoulders pattern that's a little bit bigger than the other one, and I'll show you this right here. So this is the left head. We kind of made a kind of a two-headed. This is the left shoulder, two-headed head here. Now we came down to the neckline, bounce back up. This allows for the S&P to come up somewhere up into that 64.48 level. I think if it came up here and closed the gap, it really wouldn't be too much of a. It could be as long as we don't take out the highs, but I'd rather see it come, find resistance here if this is going to play out. And if it took out the neckline, what we're looking for as a target all the way down at that 6,200. So the pattern would make sense. and we just have to, keep an eye on things. Now, if it's just an ABC move, then we're looking at a move coming up to the 65.22. Again, if it gets held down, if it get breaks above it, then we're looking at the 6600. If it gets held down, then we just have to start looking like we're trading within some type of channel here, where I'm going to draw this here, and you can kind of see where it's, we have it coming in the, let me just see if I can do this a little bit better here. So we have this here. That's the top line. I'm going to bring this up. So again, it's like a bear flag type thing. Yeah, it actually matches perfect. So here's a channel that we could be following. Again, it runs right into that 65.22. But again, this is a bear flag, and you have to remember that when you make tops, they're rounded tops because the bulls don't give up. So this would make sense. And then what happens is we start making lower tops, and you start seeing this rounded thing. But the bottoms are always V's. That's what happens with those. So again, we could be making another head and shoulders pattern. We have to wait and see. If the bulls can get above today's high, 64.55, keep an eye on the 64.81 level, and then a closure of the gap. And again, for the bears, they're going to have to take out these lows. This was, I don't think a lot of bulls were expecting this much of a sell off after being up 40 points. So if the bulls can get above it, again, we're looking at 64.63, and then up at that 64.80 level. If the bears can take this out, then really what we could be looking at, let's just say that the end of the day was the high. This really could just be an ABC move again, and we're just looking for a little bit of a lower low on it. So we got to keep an eye on things and see how things go. Like I said, I'm open minded. I'm definitely leaning a little bit more on the bear side, or let's just say market neutral. And and really my main thing that I'm holding off on is buying stocks, and I'm waiting for those to come down. But I'm trading the indexes on a daily basis. And as I said yesterday, was a I really I took this opportunity to get bullish on the market when we were up here. I actually said it in the room. I said we're the S&P has is that we this was a call wall as well as resistance. I said you can take a short with the spiders and just use the 65.60 level as your stop. So you really weren't missing much, but we got this entire move down here. So it worked out pretty good. The fund we made 2100. I carried these over till tomorrow. The September 3rd. I'm sorry. Did that? I don't know if it took. I'm sorry. These expired today, so this is even with this loss, this is here. But this one right here was a earnings play. The last one that I put out, the IREN, worked out fantastic. Went from 22, hit 30 today. And this one was a complete failure. It closed at 1671. They missed earnings. It's trading down at 1478. So it's going to be a bomb. So this is going to be a $660 loss come tomorrow. Hopefully we'll be able to make it up with some other trades. So with that, let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys in the morning.